Well, to the other side of Australia now, and Linc Energy has sealed a deal to sell its Queensland Galilee tenement to India in a deal worth $3 billion. Under it, Linc will get $500 million in cash up front, with the rest coming from royalties. Well, I'm joined now from Brisbane by Peter Bond, who is Linc Energy's CEO. Peter Bond, welcome to Late Line Business.
Good evening, Tiggy.
Well, your share price has been rushing up in anticipation, and third time lucky. What clinched a deal for Adani where negotiations with two other Chinese companies didn't make it?
Well, I think basically the environment is such that coal is in the growth in coal, and particularly for India. Adani's got 13,000 megawatts of power generation under construction. They need coal. It just made a lot of sense. They looked at our asset and it was perfect for what they needed, and the marriage was made.
We hear so much about China, much less about India. Do you think that's because the business relationship between Australia and India is still developing?
Absolutely, but from my experience with Adani, they were extraordinarily professional and very aggressive in how they went about the deal, but also very competent and extraordinarily impressive, both the way they went about things in Australia and indeed in India. So we're going to see a lot more from Adani and indeed the Indian companies in general. It's the start of things to come.
Well, you've got $500 million in cash. You've said it's a springboard for other opportunities. Are those opportunities likely to come from overseas, building on your investment in Alaska, for instance?
Yes, we'll be spudding a well there in September and building out our UCG and gas program in North America as well as South Australia. So it will be moving quite aggressively into our expansion program.
And you said that the royalty agreement gives Linc the flexibility to monetise that agreement into cash now or hold it and receive the full benefit of 20 years of cash flow. Presumably that decision will depend upon those acquisition opportunities.
Yeah, that will be part of it. Also, we have our other assets that we're looking at selling, so they will add to the mix in terms of what prices we gain and the speed that they are sold at. But at the end of the day, we've got plenty of cash up our sleeve, and we've got many years of expansion ahead of us. So it's not something we need to make a decision on tomorrow.
Peter, you obviously see a very bright future in UCG, underground coal gasification. How has Linc been impacted by the news of leaks of toxic chemicals at Cougar Energy?
Well, modestly, most people see Linc as the leader in UCG. We're very competent, very professional. We've been doing it for 11 years at Chinchilla without incident. We do a very different process to Cougar, and we're light years ahead in terms of technology and application. It's an unfortunate incident, but like any industrial business, you're going to have people that do it well and others that don't do it as well. Unfortunately, it's easy to tar everybody with the same brush, but that's just simply not the case. I think most people have been mature enough to understand that Linc is head and shoulders above some of those competitors.
Yeah, Queensland Natural Resources Minister Stephen Robertson, though, told Carbon Energy and the Queensland Resources Council that while the circumstances of each project would actually be evaluated individually, that Cougar Energy had raised concerns for the whole sector. Did that alarm you?
Absolutely. We thought that the whole way that DERM and in some ways the department in Queensland handled it was inappropriate and could have been handled much better and with much more deliberate and softer gloves. But at the end of the day, they are the regulator. We work with them. We've worked well with them for 11 years. We don't expect that to change in the future. I was just with the Minister an hour or so ago, and I believe the relationship's fine and on track. It's just that you have to do the right thing, and Linc's always acknowledged that, and that won't change.
Now, you also say that you can move quickly into completing the sales of Theresa Emerald coal, and you've had considerable interest. Is that the Chinese potentially having another go, or you mentioned that we might hear more from Adani?
Yes, probably not Adani on that asset, but certainly potentially other Indian groups. Chinese maybe, but the top three runners, in fact, aren't Chinese on that asset. And I think it's interesting just who's coming out of the woodwork. It's a good quality asset. It's a different asset. It's semi-soft coking PCI coal in a good infrastructural location, being just outside Emerald, which is a major coal mining town in Queensland. But it's quite interesting who is becoming very aggressive on that asset. But at this stage, the Chinese aren't in the top three.
And finally, Peter, how are you impacted by the mining tax proposals?
That's an interesting one. Obviously, we're impacted, as in most small to medium miners, in the fact that we need to attract capital, just as Andrew Forrest indicated. Without people willing to take risk on companies like ours, it's impossible to grow, it's impossible to expand. So based on that, we are all impacted. In terms of direct actual taxation, it's very difficult to measure because of the way we consume the coal and actually value add it. But in terms of the big picture, getting again tarred with the same brush of everybody's in the same boat of investors being a bit scared. Yes, I think everybody's impacted.
Peter Bond, big deal for you today. Thank you very much for joining Late Line Business.
Thanks very much.